You're such an asshole.
Good afternoon, Asshole Consulting. If you have questions, you go to assholeconsulting.com where you'll get the truth. Because you've been fed lies and bullshit your entire life. That's why you think majoring in English in an English-speaking country is a good idea. So, when you're tired of the lies and the bullshit, come talk to your older brother, America's older brother right here, Cappy, the world's only professional asshole at assholeconsulting.com. A young man writes, I have almost 6 figures in my 401k and I'm concerned that the stock market will crash or the economy will go into recession. I know you cannot give financial advice, but I'm not asking for financial advice. I would like your opinion about the economy if it might crash in the near future. Feel free to elaborate and explain your thought process. I'm thinking about moving my 401k money from mutual funds and keeping it as cash within a 401k for the time being to protect it against losing my principal for the time being. Thoughts, ideas, anything I should research or read to help me understand more about making good financial decisions. Thank you. Okay, well, Phil, this is a good question because the answer is philosophical, and this is something that it's not like, oh, you need to be a finance professor or some kind of fancy, intelligent, educated type. This is just this is a philosophy. This is a reality. This is a law. Everybody should understand about economics, the financial markets, the stock markets, bonds, investing, 401k, retirement. You don't know. There is no way to know what is going to happen. I always get a kick out of, like, you'll see these articles like, so-and-so predicts a crash in May of this year, or 2017 is the year that silver... Nobody knows. This is why I'm the world's greatest economist, because I admit, I don't know. Right? The people who are inferior economists, inferior financial projectors and forecasters and planners, these are the people that claim they know, when in reality they don't. Oh, I know all this about women. Do you know anybody that really knows anything about women? Like, to a law? There's only one thing. The entirety of multiple of billions of men living scores of years of life. They have come up with one only concrete fact about women, and that is, we don't know. And if you admit that, you're infinitely further ahead than anybody else claiming otherwise. Now, the reason we don't know is quite simply is predicting the future. Okay? We have history to go off of, and we could say this is how things have been in the past, these are the averages, and based on history, what we're currently at now with valuations, measures, statistics, we're either undervalued, overvalued, due for a correction, due for a bull market. It all depends. But we don't know what's going to happen. Another thing is, like, for example, this, you are right in this one regard. When we look at PE ratios, dividend yields, other measures of value to assess whether or not the stock market is fairly valued, overvalued, or undervalued, right now, based on historical measures, it's very overvalued. I even took a look at price to rents now for housing, and we're back up to where we are in 2006, 2007. There's some other fundamental differences from there, but in any case, we can say, historically speaking, looking in the past, using past data as a gauge, we are in an overvalued market today. But when does that crash come? When does the correction come? Well, see, that's hard. It's kind of like, when does that last bit of a snowflake fall on the mountain cliff of snow to trigger the avalanche? You don't know which snowflake it's going to be. Right? So usually there's a catalyst of things sometime. Usually there's a government report that comes out and GDP was not as high as expected, and then all the financial markets freak, and that's the snowflake that causes the avalanche of a crash. In the housing market, I don't know if there was a pinpointed time, but I think, all of a sudden, they made one development, they went a bridge too far, they made a development too many, and that development didn't sell, and then that bank didn't sell, and this did, and that triggered a domino effect that made housing prices collapse. It's impossible, China declares war on Japan. It's impossible to know what that snowflake that triggers the avalanche will be. And it's a fool's errand to try and figure out what it will be and when it will happen. All right? But we can say, historically speaking, we're overvalued. Now, the problem that you're trying to time it. That's the problem you're trying to do here with your 401k money, of which 6 figures is very sizable. Very sizable, especially for your relatively young age. And what you want to do is you want to play crystal ball looker and future teller, and you are trying to figure out if there's a way to go beyond we don't know. And the only thing you can know about women and the financial markets is we don't know. And once you go beyond that, it's going to be now. Looking in the lens, this is why I asked how old you were. If you were on the cusp of retirement and really needed it, all right, then you would start thinking into converting from stocks into bonds. That's the traditional thing is as you get closer to retirement age or death, you switch out of the high risk stocks and you go into more stable fixed income type of bonds. So it's going to generate you that 3 or 4% a year, and that's your steady Eddie income. Whereas when you're younger, you can survive the ups and downs. And you are 33, and if we go based on history, with the ups and the downs, and we saw it perfect. We just saw it perfectly. The U.S. stock market was at its high at what? 2007, and then it crashed to a low in 2009, and then it triples. It has tripled since 2009. Right? So there are these ups and downs, and even I didn't buy. Well, I didn't have any money. That's another reason. But I'm like, no. For me, I'm a value investor, so I have a different philosophy. It was fairly priced. It wasn't a steal. It was fairly priced. But we had quantitative easing, we had low interest rates, and a ton of money flooded the market and tripled the stock market. It's not a coincidence that under Obama, the money supply tripled, and then the stock market tripled. And tuition tripled, and housing costs tripled. Why did everything triple? I don't know. I'm just a dumb economist. But what you're trying to do is figure out when this crash is going to come. You want to then switch to cash, and then you want to, when the prices you want to buy back in at low. And I'm saying that's pretty much impossible to do. Now, this doesn't mean there aren't some things that you can do to lower your risk or prepare to take advantage of a situation like that. And this is where a very simple law or rule of financial management comes in, and that's diversity. I'm not talking anybody but white males diversity. We're talking the good type of diversity, where you don't have your eggs in one basket. Right? So what you can do is you can have, say, a fifth of your money, not cash out, but switch out a fifth of your money from 401k, or from equities in your 401k to a cash or money market account. So that if the stock market does crash, you got some cash that you can go ahead and buy stocks in on the lower end for. You can further diversify your 401k by investing in international equities, all right? There used to be less of a correlation between the U.S. stock market performance and other countries' stock market performances. As the world has become more globalized, that correlation has kind of tightened a bit. But, just because the United States is having bad times does not mean the New Zealand economy or the New Zealand stock market is doing bad. So what you can also do is you can invest in foreign investments, foreign equities. If you, take a look at some bonds, perhaps. Take a look at some preferred shares. If you want to get into real estate, you can get into real estate investment trusts. If you want to get into commodities, they have ETFs and mutual funds that invest in commodities. There's a lot you can do to diversify and therefore lower your risk and hedge against a collapse in U.S. stock prices. But trying to time it is impossible. I'm doing these, I'm going to cash out all of it now so I have cash, and then the day after I cashed out, it's going to crash by 90%. I'm going to buy for 10 cents on the dollar. That's just not going to happen, right? So what you want to do is look at the long term. And I'm not a big fan of traditional retirement planning. Matter of fact, I got my new book coming out called The New Retirement. I go through taking things that are much more under your control than relying on stock market prices. But you're 33 and you want to take a look at the long haul. All right, and the stock market will go like this, unless it's the Japanese decay and kiss went like that, and it went like that, and it stayed down. Still, what you want to do is look for the long haul. You got at least 32 years before you retire, and stocks are going to go up and they're going to go down. And that another strategy ain't the worst. I mean, when video games go on sale, when Kohl's has a sale, when McDonald's has a special on Big Macs, all of a sudden there's a stock market dip, or there's a stock market crash, maybe buy a little bit more. So it's always good to have some dry powder on hand to buy at these dips. There's nothing wrong with that strategy either. But this big, I'm either all stocks or all cash, and that, no. what you need to do is have a very well diversified portfolio that it will go up and down with the stock market, maybe not as much up or as much down because you're diversified, but it has this nice steady eddy growth over a while because you're amply diversified across the world's productive assets. So maybe buy some factories in China, maybe buy some auto companies in Germany, maybe buy some oil companies in Russia, maybe buy some precious metals. Just have some precious metals at home. Nothing wrong with that. Maybe buy retailers when shit goes south, whatever it is. Have some bonds, have some stuff, but that is the key thing, is diversifying. All right, so one, give up this concept of when is it going to... There's no when. There's no science. So finance and economics and women are not a science. There's no, oh, here's the formula, here's the algorithm. Like these economists and pickup artists, and not even the pickup artists, but the students who attend pickup artist school, they're both the same breed of stupid. They think that women are these like finite programmable variables that we just have to tweak the algorithm. I take that back. It's economists, students of pickup artists, and global warming scientists who think they're actually going to fucking get the formula that precisely and accurately predicts women, the financial markets, and the climate. Whereas the people who do the best, I don't know. I really don't know. We got some theories, but we found that this works best in the past, but don't have any expectations for the future. That's the best it's going to work. So yeah, don't do anything as drastic as all cash, all stocks. Maybe talk to your 401k guy if you got an advisor. Again, I'm not a big guy about the advising, but I went to school for finance, so I kind of know how it's like. Who do you go to as a mechanic? But the guy's an auto mechanic is like, myself. This is how I fix my car. And then anything I should research or help me understand more about making good financial decisions. Yes, take my 2 online classes. I have the analysis and valuation of stocks. That's a great class if you want to learn about stocks. And it's a good class just to learn about accounting, which is kind of like the core tools we use to analyze investments. The other thing is another class I take called Stocks, Bonds, Investing, Oh My. And you just search it. They're offered at hundreds of different, community programs and after school this and your local community center that. I think it's around $100, maybe $120. It's going to cost you. But the Stocks, Bond is Investing, Oh My. That's like the very introductory basic. This is a stock, this is a bond. Here's how you allocate a portfolio. This is a trading process. It's a mile wide and an inch deep. But the one I really personally like more because we focus on one thing and you get to be a bit more, you get to delve into what is value, how does a stock have value. That's called the analysis and valuation of stocks. So just sign up. You can sign up wherever because it's online. Find out where it's cheapest. And if any of you also listening, you certainly could sign up for it. Maybe I could. Can I? I don't even know if I got links. If I find them, I'll put them in the links below. Don't get mad if I don't put the links in. I'm very busy. I have things going on. It's sunny out. I want to go smoke a cigar. So anyway, I hope that understands. So let's understand that there is nothing you can know. There's no math. There's no project. This is not an engineering, laws of physics, science you're dealing with. Okay? It is anticipating the unknown and common sense strategies such as not having all your eggs in one basket, having no expectations, being prepared, having reserve funds, worst case scenario, best case scenario, being adaptable, being flexible. And frankly, another huge thing is making sure you are highly compensated for your time. Being a surgeon, you think surgeons worry about this shit? I guess I'll just do another one surgery this afternoon and we'll have enough money to live for the next 5 months. That's a huge thing if you make $500,000 a year. A lot of these problems go away, but I am certainly no Ben Carson. Anyway, if you guys got questions, go to assholeconsulting.com. The world's only professional asshole and America's older brother. That's me. We'll take care of you. Check out my blog, captaincapitalism.blogspot.com. I got a podcast on SoundCloud called The Clary Podcast, and you can get any one of my books, Bachelor Pad Economics, foremost among them, at Amazon.com. Just search Aaron Clary, AARONCLAREY. We'll see you guys later. Toodles.